Imagine an investment that opens doors to a world of opportunities with a single purchase. This is the essence of the Exchange-Traded Fund, or ETF. An ETF is a professionally constructed basket of investments, stocks, bonds, commodities, or a mix, all trading on the stock exchange like a regular stock. With one ETF share, you instantly own a portion of every asset in the fund, turning complex investing into accessible action. ETFs revolutionized investing by providing instant diversification. Unlike single stocks, ETFs spread risk across dozens, hundreds, or even thousands of companies. If one company underperforms, others can offset the loss, reducing volatility and supporting long-term investors through market downturns. ETFs are known for extremely low costs, with expense ratios as low as 0.03 to 0.2%. Over time, this cost efficiency can significantly boost returns. Mutual funds may charge over 1% annually, but ETFs keep costs low by tracking indexes passively, not trying to outperform them. ETFs also offer trading flexibility. You can buy or sell ETF shares at any time during market hours, unlike mutual funds priced only at market close. Consider SPY, an ETF tracking the S&P 500 index. One share provides ownership in about 500 leading U.S. companies, from Apple to Amazon. SPY and similar ETFs replicate the index by holding nearly all its components, ensuring your investment closely matches broad market performance. ETFs come in many forms: broad market ETFs, sector ETFs, bond ETFs, commodity ETFs, international ETFs, and thematic ETFs focused on trends like AI or clean energy. Each type targets different investment goals, from tracking entire markets to focusing on specific industries or global trends. All ETFs involve market risk. If the market falls, so will the ETF. Specialized or leveraged ETFs can be risky for beginners. It's important to understand each ETF's holdings and strategy before investing. Index ETFs are designed to track benchmark indexes such as the S&P 500, NASDAQ 100, or international markets, using a passive investment approach. They hold all or a representative sample of the index, adjusting only when the index itself changes. This leads to low cost, instant diversification, and tax efficiency. Index ETFs trade throughout the day, just like stocks, unlike index mutual funds that only trade at market close. Investors love index ETFs for their low cost, instant diversification, and tax efficiency, thanks to passive management and low turnover. Examples include S&P 500 ETFs like SPY, VOO, and VSP, NASDAQ 100 ETFs like QQQ, and international or sector index ETFs. Now let's focus on VSP, the Vanguard S&P 500 Index ETF, CAD Hedged, especially important for Canadian investors. VSP is a Canadian-listed ETF tracking the S&P 500, but it neutralizes currency fluctuations between US and Canadian dollars. VSP was launched and managed by Vanguard Investments Canada with co-management by Vanguard Global Advisors, leaders in low-cost index investing. Formed on November 2, 2012, and domiciled in Canada, VSP has a decade-long track record. VSP holds large-cap U.S. companies, the same as the S&P 500, either directly or through Vanguard's VOO ETF, using full replication. Its top holding is 100% VOO, making VSP an efficient way for Canadians to access the U.S. market. VSP uses derivatives to hedge away currency fluctuations, so returns reflect pure S&P 500 performance in Canadian dollars. For example, if the S&P 500 rises 10% but the US dollar weakens, VSP offsets this, delivering returns in Canadian dollars without currency drag. VSP's sector weights include 35% technology, 12.6% financial services, and 11% communication services, among others. Recent data shows VSP's one-year return at roughly 12.6%, with average annual returns since inception at about 13.5%. Historical backtests indicate a 30-year compound annual growth rate of approximately 9.6%, inflation-adjusted. VSP's expense ratio is just 0.09%, making it exceptionally cost-effective. VSP is ideal for Canadians seeking U.S. market growth without currency risk, managed by Vanguard and powered by VOO. It's perfect for long-term passive investors, those using RRSPs or TFSAs, and anyone wanting S&P 500 exposure without handling U.S. dollars. But if you prefer unhedged ETFs, want foreign exchange exposure, or seek high volatility trading, VSP may not be for you. In summary, ETFs are baskets of assets that trade like stocks, offering diversification, low fees, and flexibility for all investors. Index ETFs provide passive, cost-effective exposure to leading markets, trading throughout the day, and keeping costs low. VSP, launched in 2012, created by Vanguard, tracks the S&P 500 in Canadian dollars with a 0.09% expense ratio and a 100% VOO holding. With careful understanding and the power of ETFs, you can chart a course toward financial growth and security. The opportunity is accessible. The decision is yours.